Today's number is 200, and the reason, well, it's all got to do with insiders from Wall Street. Yes, it turns out of the last 200 transactions, 198 of them were sells, and this may come as some surprise to many of you out there. With Darkpool transactions going absolutely ballistic in all of the key markets over the last couple of sessions, today we'll break down what you need to be looking at, including this chart that showed us rotation a few weeks ago, and of course, where the money flow seems to be going, because it may not be the locations that everybody is looking at. You guys know we've loved gold for 2 years, but is it about to get even better? Let's take a look at stocks, commodities, and cryptos for everything that you need to know right now about what's leading this market and where we could be headed. See you soon, guys. This one is not to be missed. Well, welcome back everyone to The Daily Show. My name's Thomas Atkinson, and in today's video, we're taking a look at the latest macro, the data, and of course, those key flows, including the Darkpool transactions that you need to be watching. What is Wall Street up to? Well, in today's video, we should be able to uncover some of the biggest things that they've been doing. So first up, let's have a look here at a list, and you probably can't see it straight away, but this is the top 200 transactions of the last week. And upon this, you'll notice that 198 of them are all sells. This comes from insiders, directors, CEOs, everybody else, and only 2 of them were actually buys. Now you might say, well, that probably doesn't mean anything because insiders generally sell. That is true, but at the same time, this is a huge amount of transactions going through, and it actually correlates pretty strongly when you take a look at it with the overall Darkpool transactions. Now, when was the last time we saw this? Well, most notably, we saw it around the 2000s .com bubble time, where this actually continued for quite some period. In fact, Bill Gates was well known to sell tons of stock near those highs. And at the same time, we also saw large transactions around the election in 2016. One was correct about a bubble and a sell-off. One was incorrect. And of course, the markets ended up rallying in 16. But which one is it this time around? Well, let's take a look at some of the lead indicators that we've been using on the channel together to really define the last couple of weeks and in fact see Wall Street's sneaky flow transactions, because we know that tech was rotated out of around 2 to 3 weeks ago, and this was one of the lead charts. And of course, what that chart was recognizing the top 10 stocks that have been taking us on the way up, and then of course recognizing that the volatility or the volume started to get higher as we got into these peaks. Now, why is that important? Well, unless this chart is realistically leading the market, it's going to be really tough for the S&P 500 and NASDAQ to make all-time highs and to continue on the way that they have been. Remember, we've just seen the 3rd fastest V-shaped recovery in history, and we do have some headwinds coming, including jobs numbers this week, and we also have, of course, inflation numbers that will be starting to show up potential tariff concerns. So why is this chart the most important that we need to be watching? Well, 40% plus of the overall market S&P is actually made up of tech. So if we don't have the leaders of the tech revolution going, it's very difficult to get them up. So remember that this chart is one that I would be tracking. And of course, we do track it here on the channel. So make sure to subscribe if you're interested in that type of stuff. We do it all the time, finding these charts. Thanks to you guys as well for sharing some of them with us. Now let's go over here with gold. Now, you guys would know if you've been watching for the last couple of years, I've been a huge fan of gold. In fact, we've talked about gold being bullish for ages and ages and ages. And I've even been on some of the big TV shows talking about it over the last couple of years. Now, is this already starting to look great for gold once again? Now, we started to see the biggest transactions. Remember, just a week ago, we saw the largest Darkpool transaction, which is a transaction between 2 entities, so of course 2 large institutions with each other, so it's technically done kind of off market and then reported onto the market, and that was done on GLD, which is of course a massive exchange traded fund. Now it happened just here, and we speculated that was probably a buy because of course of the trend that's been bullish so far, and because the trend had been coiling into what we call a symmetrical triangle or a pennant. Now, I posted some of these charts over on our X account, links in the description down below if you want to follow us there. But you'll notice that it broke out, and it more importantly broke 34.50 just last week. And what this led into was a huge rally, making an all-time high. Now, if you base it on a pennant kind of pattern, you'd be starting to look towards 4,000 and 4,200. I asked you guys in the comments what you thought about gold, and a lot of you had these levels, with a lot of you also, pretty smartly I may add, recognizing that the next zone could be around 3,700 to 3,750. And the reason that you were saying that is because, of course, if you take the distance of a standard symmetrical triangle, I like to go around 2/3 of the way through, then you'll start to get that A kind of area equaling B, and it will equal around that 3,700, 3,750. So it's clear that someone is making a major move. Silver doing even better than that. So why is this happening? Well, it is, I believe, a mixture of central bank policy. Of course, we saw central banks purchasing more gold than ever before. Well, not ever before, but certainly adding to their overall treasuries. We've seen more now gold than treasury buying from central banks. So this suggests that we are in what we call a currency war at this stage. And of course, we've started to see the three pillars doing very well: silver, gold, and now Bitcoin. Now, recently, Bitcoin has started to see a pullback, and a lot of people are getting concerned about this because they think it's the beginning of the end for crypto. Well, we'll look at that later on because there are some things in similar cycles where Bitcoin has done something like this. It's actually dropped over 20% plus and still had a resurgence to an all-time high. Now, the reason I bring this chart up is because we saw Bitcoin as a risk-on, risk-off asset lead the markets down back in January and February of this year. And that is seemingly what people are starting to draw the conclusion of before. If you want to study this chart again, it's over on our X account. But you guys can see here that at the moment, Bitcoin is making a series of lower highs and lower lows. We'll look at that chart later on. But at the same time, the S&P started to show some weakness over the last couple of sessions. And if it does break through a few levels we'll look at, including 6,350 and 6,200, it could be that we're in for what we call a September, which is the statistically worst month of the year. Insiders are selling into it, but are they right? Well, we'll look at those stats soon. Let's now take a look at the dark pools and the large transactions. First up, a massive one coming in for KRE. Now, you guys would know that when I see financials moving up, I'm not usually too concerned about the overall health of the market. I usually say, you know what, financials up, all green, all good. And if bonds are doing well, that's also fantastic. Our bonds indicator is showing no concerns at the moment, but we did just get a large transaction coming in on regional banks. So that suggests that maybe we're starting to see a little bit of profit taking from those lows back in April. So there's a little bit of profit taking now. On top of this, we saw semiconductors getting some big transactions. First up, we've got here SMH, which is the biggest exchange traded fund for semiconductors. We saw a large amount of dark pools came in last week. And so far, the market's gone down to this level and obviously seen a little bounce here. So if we lose this zone down here, this could be a big deal. And it gets a little bit worse when you start looking at all the semiconductors. Have a look at all the transactions here on Soxal, the most popular exchange traded fund with 3 times leverage. Huge amounts of transactions, including the largest ever, the 4th largest ever, all coming through this potential accumulation or distribution. And this brings up many questions along with this one, which is one of the largest dark pools ever to be transacted on NVIDIA short ETF. And so far, that has actually come in around that time of the earnings, just before the earnings. And look at it now. Wow, they're actually up a bit of money here. So there's clearly a bit of a change from where we were in April, May, June, July in the semiconductors market. And we've been tracking that. We've got a couple of good reads on it later on today's show. Now, you might say, well, does this mean this is the end of the market? Oh, everything's going down. Well, the good news is probably not. This is actually pretty normal, as you can see here, based on Nautilus investment research post-election years, to see the market tracking around where it is. And funnily enough, to actually see it drop around this period, then to stabilize, and then to potentially do better in the next kind of like 6 months. Now, why is that important? Well, it's what we call a pit or a pullback in time. And in the market, something similar to this happened several times in the past. And what's actually occurred then has been rotation. Now, if you take 40% plus of the entire market as tech, if you're not leading on tech, it's very difficult, and it's actually dropping or rotating out of at that point. It's very difficult for the S&P to do well. And that seems to be where we're finding ourselves, because remember, the bonds market is not destroying itself right now. It's not saying, oh, we're all concerned. The yields are starting to go up, which we'll talk about throughout this week into the jobs numbers, but we're just not seeing that level of concern that you would generally expect with a proper major sell-off. Now, the price action is something similar. The S&P is holding better than the NASDAQ. The NASDAQ kind of looks like what we call a head and shoulders pattern at this stage. But at the same time, the main first level, 63.50, actually held. So here's the first big support. The second big support, of course, is 62. And if we lose 62, then you can start talking about, okay, are we in a proper corrective phase at this point? But for now, remember the trend is up, and a lot of people are going to be drawing double top patterns, and they're going to be looking for breaks under this level. But the bulls still are in control of this market, and it does seem like rotation's going on. Now, how frequently do market corrections absolutely drop? Well, according to the data here from Seth Golden, you can see that it is not that common when we talk about all-time highs and major market corrections. In fact, only 9% of the time does 1 year out have a correction in it. And if you actually look at the 3-year and 5-year data, 0% of the time is the market actually not doing well 5 years later. So it's amazing when you look at it how bullish this market, or at least markets generally are, and why, statistically, it is still easier to be a bull than a bear. Always remember that. Statistically, I say this to all the students that do our courses and look at our cycles and look at our things. It is much easier to be a bull than a bear in markets because, of course, being bearish often is wrong. So the key is just to know when you expect those data-based pullbacks, and then whether you have powder to then, of course, implement into the markets. Now, is September the worst month of the year? The short answer is yes. If you have a look here, Dow Jones, S&P, NASDAQ, they don't fare so well. Funnily enough, the Russell tends to do better, but then it also does lose in October. So again, it's all about just understanding that September is pretty normal to see a sell-off. And I saw this one here, Blue Kurtik, I think, has gone through, and he found that if you have a positive August at an all-time high, then you actually see a September that is historically negative. In fact, he found that only 23% of the time was September bullish over this period. So August could have been bad. It certainly wasn't. Of course, we ended up with a pretty nice gain, 1.91%. Could have been bad, but it wasn't. And then we've now seen September changes. They are historically a little bit negative. And you might say that here, well, not very bad. Yeah, that's correct. The percentages sometimes are a little bit more, like 4 or 5%. Most of the time, they're kind of just looking at a couple of percentage points. So you've got to expect the potential here of a pit. Now, is it expected that it happens post Labor Day? Yeah, that can be when it starts. But generally speaking, it tends to happen around the middle of September. And we'll have a chart in our next video that will show that. So the middle of September is historically the weaker period. That's the second half of the month. But I would expect volatility throughout the next 2 months. It's very normal for it to happen here, especially post earnings. Now, what about Wall Street? What are they doing? Well, you can see here Evercore's Julian Emanuel actually believes this is a big buy. And this actually is echoing sentiments to what Tom Lee's been saying, which is, of course, that financials are going to see a huge change due to AI and the technology that's around. In fact, he said here, is in Julian Emanuel, said, twice in a lifetime bull run, AI is driving structural revolution, not just a trade, lifting all sectors from tech to utilities. The S&P 500 hitting 7750 by the end of 2026. So most people are starting to say, okay, we might get a pullback to 6,200, 6,250, but people are super bullish. And in fact, I've been starting to hear people saying 9,000 is possible. So, it's okay. Take it with a grain of salt. But at the same time, if we do get to those levels, I think you guys will be noticing that we won't be talking about a bubble anymore. People will just say, I know it's wrong, but I can get out before everybody else. The classic sell signal that happened also in 2021. Now, what might drive this market up? Well, it could be, more the tech companies and everything. But do remember, we've also seen a bit of a historic run here for the Russell 2000. So the Russell 2000 just completed 4 bullish months in a row. And the last time it did this streak was 2021, which ended up at 9. So it's actually a very similar rotation that we're starting to see right now. And the Russell has been performing a little bit better recently. There's also consistent here, as you can see with Grant Hawkridge's data from the Zweig breadth thrust average. And funnily enough, what do you start to get around this period of time, guys? often volatility, often spiking, often all sorts of shenanigans from the street itself as it moves through. Now, of course, there are concerns on the horizon. The Federal Reserve has pretty much signaled through Jackson Hole that Jerome Powell is saying basically we will get an interest rate cut. This pretty much brings up now the case of many interest rate cuts coming. And I think you guys need to remember that it really comes down to the structure post an interest rate cut. Now, we generally know that interest rate cuts bring the bulls to the markets, but if they don't bring the bulls to the markets, something is wrong. And a lot of this will actually come back to the sectors. If small caps and mid caps actually do better over the next 6 months, 3 months post a rate cut, that is actually maybe a concern. Since the 1970s, that hasn't been a great read. So where is safe? Well, some people believe it's gold. Some people believe it could also be commodities, silver, and other things. And the reason why is because, of course, we are seeing a huge resurface or resurgence of this type of trade. And I've been a believer in this for quite some time due to, beautiful technicals, beautiful macro conditions, and all sorts of things. But just remember that commodities are still quite far behind. So there's a chance here that we may see play catch up. And a lot of that's going to come back to stagflation. Remember, if we get a lot of rate cuts, we start to see the inability for the market to be growing anymore due to those rate cuts even coming through properly. And we start to see a slowing economy or a lagging economy with inflation coming back due to these rate cuts actually and tariffs. That would be a stagflation economy. And those tend to do well in that period. So it's something we'll continue to cover here. And we actually just saw one commodity breakout about a week ago, which I think we're probably one of the earliest to see that, based again on early technicals and flows. Now, speaking of flows, cycle, structure, Bitcoin enthusiasts and everyone in crypto markets, are things playing the way you would expect? Again, the short answer seems to be yes. There are some concerns on the line. Of course, MSTR comes into focus. That is certainly something that I think is getting compressed at this point due to just how many funds are copying the system. But at the same time, you can see it's pretty normal in cycle halvings to actually see around this period a Bitcoin decline, a hold or a relative hold of other major kind of current cryptos, and then we see potentially the beginnings of the alt season. Now, the thing about the alt season is people don't realize it's quite short. If you actually have a look at typical alt seasons, it goes ballistic over like a 30 to 40 day period. It doesn't last for long. So at the moment, we've seen money flow coming into Ethereum, other large caps. They're holding better than Bitcoin as it drops off. We obviously need Bitcoin to come back up, so that'll be important. But if we're going to see alt season, generally speaking, you would see it kind of in October, November, December, if it's going to follow similar cycles. What do you guys think, though? Let us know in the comments down below. Do you believe that we could be in for another alt season this year? Now let's jump on over to the charts. We'll look at the S&P 500 first. Of course, advanced decline line did drop, but no real concerns there. A lot of people are going to have double tops, all this type of thing. We'll look at the NASDAQ later. That's probably the more interesting chart. But certainly the first bull level held. So if you were a buyer over the last 24 hours, that 63.50 zone was certainly the first level to look at. We've already talked about that before. And if we drop 63.50 now, a lot of people are going to be looking at 6,200. So they are going to be the two main levels. You can see here on the futures, the wicks that have come off 63.50. So again, are buyers there? Yes, for now. If that level drops, what are you going to see? Probably a flow change down to that 62 kind of 30, 6,200 zone. So certainly some key levels to look at. Let's have a look why we found buyers over the last 24 hours. A lot of it had to do with puts. There's so many puts. Every time the market sells, everyone jumps on the put wagon. And now we have a huge 6,400 zone of puts. It doesn't seem to matter which expiration we're looking at this week coming into non-farm payrolls, but 6,400 is the strike of everybody starting to turn more negative. And notice that the market closed at 64.15. Why? Because it held above those puts, that put wall effectively. If we drop this wall, it could go negative gamma pretty quickly. Again, we could be at 6,200 just like that. But I think this is going to be the big zone. In technicals, it's 63.50. In the options world, it's closes underneath 6,400 that could start to get the market firing in terms of the bear side. Let's have a look now at Tesla. It's still stuck within the zones. We've talked about 350 being a call wall. Couldn't quite get through that one for now. And of course, 320 seems to be where the main puts are at this point. Nvidia is kind of similar. It's struggling between 170, which is its put wall. So again, it drops underneath that. It's going to be a big sign here, along with those dark pools that we saw later, that the market may actually be turning bearish, at least for now, on those majors. And the 180, 185 is on the call side. So until we're above that, we're not really seeing bulls come back in. Now, we discussed this chart before. Bitcoin dropping possibly earlier than the S&P 500. There's some correlation here. Of course, Bitcoin is a highly sensitive pair, risk on, risk off, that type of thing. But I'm not sure it's the general correlation you want to be looking at. Some concerns in the Bitcoin market, though, at least coming through, are that strategy, which is MSTR, has gone down and made a new low. So why is that important? Well, I think it's because people are just copying the strategy. I think the last report, we had like 140 copycats, and this is meaning that we're seeing a change to that NAV number. So this will be an interesting story to see how it plays out, but the price action at the moment isn't exactly what I would call bullish at this stage. Another thing that hasn't been bullish has been the top 10 stocks. They dropped underneath our rising channel. They obviously since then have triggered rotation. And while they did find buyers over the last 24 hours, you see how important this support is at 720, yeah? So if we close below 720 again, could bring and open the floodgates towards further selling. For now, a little bit of a hold. And what that's doing is it's pushing money, or at least money is flowing into other pairs. Take a look here at energy. Energy versus the S&P, rotation is occurring, guys. We're seeing energy stocks doing better and other positions starting to find a bit of flow. Even the dollar found bulls over the last 24 hours. And it has a lot of people starting to say, well, wait a second, what's going on here with yields? We've got 2-year kind of going down, and we've got the 30-year getting back to that 5% level. This is a concern, of course. We've talked about 5% triggering all sorts of treasury woes. So this will be worth watching. But at this stage, the overall bonds market hasn't really been showing significant signs of weakness. Now, where we have seen strength, though, has been the kind of anti-fiat trade or the currency war trade, which is gold. Look at this thing go, 35.31, an all-time high. Now, I cannot say we're disappointed with this. I'm certainly not. This has been pretty phenomenal for quite some time. Obviously, beautiful technical break here. I wouldn't be surprised to still see sells coming in on gold, but it does bring open those kind of ideas. So the first one is, of course, the symmetrical triangle. You're taking the distance, usually of around here, and you're saying, okay, if we extrapolate that distance out, what do we get? And you get around 3,700, 3,750. Now, if you go further and you take the whole pennant length, you're going to start to get somewhere around 4,200. So this is a pretty big number. I think it's certainly possible. You guys know I was one of the first to call gold 3K. I've since updated it to 3,600. And then, of course, I said as soon as we got this pull side, that actually it looks more like this one could be in play. So gold does look bullish at this stage. And of course, the flows are pretty good. Silver is the same thing, 40.70. It's getting close to that 42.43 first target zone. And, you know, where's the sky high for silver? Well, it certainly could be above its all-time highs, which is like around that $50 mark. So, yeah, big movements, big flows, holding pretty well for now. Energy stocks also doing okay since we first started talking about them a few weeks ago. And you can see here they're continuing to find some bullish bias above the 89. Maybe the first stop, 94. We'll see whether they can do that. Semiconductors versus SPY. Now, for a lot of people, this is where the weakness is. It is the weakness in the semiconductors that needs to be watched. And when you take a look at this combo, you could argue that this was a trap as a Wyckoff distribution. And if we drop this level, that we could be looking at actually a flow down. Now, the reason this is important is because when you start looking at semiconductors and you start looking at things like NVIDIA and stuff, if they don't lead, you can see again, look at that major support, second level here, this major support here holding belly. If they don't lead, then we could see a pretty quick sell-off down to this first level, gap fill, all those types of things. A lot of people drawing this, which is the left shoulder, head, right shoulder, obviously head and shoulders pattern. Very important level around 280. So again, dark pools are coming in. Are they buys or sells? We'll find out soon, but it is coming into the worst month of the year. And then, of course, NVIDIA putting pressure on the bottom end here, but still finding buyers over the last 24 hours. So again, you break down, you're looking at this, which is around the 150. If you break up, of course, you're looking at about 200. Now let's move over to some other things. TSM, another one putting pressure on the lows. So you can see here again, guys, the semiconductors doing this. And yeah, I think it's important to note semis really do rule the stock market at this stage. We talked about Tesla before. We're around this level of 330. 350 is the next call wall, of course. And we're just kind of in the most traded zone. So anywhere in here is where traditionally Tesla bulls have kind of sat recently. I'm not really, any way here. I think that the bulls did start to control the charts recently. They hit 350 first target, but 380, 400 is not out of the possibility. It can happen. On to China. China started to see a bit of volatility, but it was a good result from Baba. And again, it's still in an upward trend. So if it pulls back, some levels to look at, 20 moving average on the composite and 50 on the HSI. NASDAQ, this is the one that most people are going to be drawing around. And just because you can draw a head and shoulders doesn't mean it's going to, first up, actually even initiate the trade. Now, you can see it came under pressure, 23,000, did find buyers. It's weaker. We've known that for a while. It's got rotation. We've known that for a while. I don't think you need to be like totally freaked out or anything though, because again, if the bonds markets are not freaked, why should we be freaked out? There's no real reason. Solana, the alts have been doing a lot better. You can see here that Solana has been rising on up and it actually looks a lot better. I mean, Bitcoin's down. This one looks like it's trying to bounce up. Ethereum is something similar. You can see here again, just hovering in that zone after the large move. And with Bitcoin, it hasn't made a higher high yet, but I think 113,500, that's going to be a level for the bulls to watch over the next coming sessions. For now, it's still a series of lower highs and lower lows. So obviously looking towards these two levels down here, they will be zones to watch for the markets. Now let's have a look at the US 2K. So we just quickly look here at the Russell. It's been falling. We know that the market's turned bullish a little while ago. The first target for a lot of people is going to be 2440, and we still haven't really dropped the zone. So for now, the markets are still bullish in US 2K land, but again, there are rotations and volatility coming in. And this is just because, of course, things like the VIX started to spike up, which it's perfectly normal to see happen over this period. I think the long and the short of it here, guys, there's a lot of repositioning into the jobs numbers. We are going to have one of the biggest news events of the month coming, what is pretty much the biggest one. That's Friday, September the 5th at 8:30 a.m. New York time. And of course, you will have to be watching this number, but really, it's not so much about the number itself. It's about the market's reaction to that number. So remember, it's also about the last two revisions. Are they revised up or down? They were shockingly revised down last time. Now, I'm not even sure the number really matters anymore, but the main key here is what happens to the yields. So the US 2, 30, all of those types of ones. If you enjoyed today's video, remember to, of course, subscribe, smash that bell icon. Definitely check out some of our courses if you want to know more about how we found gold, silver, the macro side of things, and how we implement that into the charts, flows, dark pools, etc. in our advanced course. Otherwise, of course, follow us over on X or follow me on LinkedIn, Thomas Atkinson. Great to have you over there as well, guys. Thank you so much. We'll catch you in the next one. Bye for now.